Hey, how's it going, everybody? Welcome back to the channel. And it's Saturday, and this is going to be a long weekend considering that Monday the markets are going to be closed because of Martin Luther King Day. So we got 3 days off to think about what we're going to do next week. But today I really want to talk about a few stocks that I'm actually really interested in purchasing more if they go down more. Because we all know on Friday the markets did go down quite a bit. So my portfolio is down a lot, and a lot of my stocks are down 5 to 10% around in that range. That I'm really interested in purchasing, and might put down some more money into these stocks. And the first one I'm going to be talking about, and of course you might already know what it is. It's the stock that I own the most shares in and the most capital in is Neo stock. Neo is at $56, down 7.56% today, and it's actually down quite a bit from its all-time highs. Its all-time highs were at about 66.99, so $67. So from there, it's down about 11 bucks from its all-time highs. So even at these prices, if you think that Neo is going to be going back to all-time highs anytime soon, then this might be a good opportunity to buy. But in my honest opinion, I believe that Neo could potentially drop to low $50 to the $50 range, right? And that's honestly what I feel would be one of the best times to buy. If you can get to around 50 bucks, which I believe it might be able to hit that range next week, depending on if there's any more news or the markets keep going down. That's probably the range where I would want to be buying it at. So the way I would take this is I would probably sell a put option because I'm trying to make some money while not being able to get the price of the purchase if it doesn't go through. Is I will sell a put for next week, or maybe even after next week, maybe 2 weeks, 3 weeks out, depending on how I see it. And you can get about $56 in premium right now. Probably will go down on Tuesday because of time decay. Most likely, I will do this probably for a whole month, for until February 19th. I'll most likely do that for 50 bucks because I believe at $50 that's an amazing deal. And just by looking at the price, you'd be getting $390 in premium. If it doesn't hit 50 bucks, so be it, right? But if it does hit 50 bucks or below $50, you could get 100 shares for $50, so $6 below it is right where it is right now. So you're getting a nice discount, which is probably another 11%, 12% down from where it is right now. Plus, it's already been down at 13%, so you're getting a massive discount, and you get to get the $390 in premium. So I think that's an amazing way to play this, and that's probably what I'm going to be doing as soon as it hits Tuesday or Wednesday, depending on how I see the market. If the markets keep going down, I might even put it lower, depending on how much lower the markets go and how much Neo stock goes down. But yeah, most likely the way I'm going to be playing is I'm going to sell a put for around 50, 49, $50, depending on what Neo's price opens up on Tuesday. And if it continues to go down, you will get a nice discount of about uh, $17 from its all-time highs if it gets down to below 50. And you get to keep the $390 premium for the month. So that's pretty nice. You get a good discount and you get $390 just for doing this play. And if you don't believe in Neo stock, then you shouldn't play it. But that's what I'm going to be doing. I'm no financial advisor, right? So you do your own due diligence. If you believe Neo stock is a good buy, then that's something that I would do personally. Because in my honest opinion, Neo's going to be going up a lot more. Next play to look out for is APHA. And APHA has been going crazy, and it's mainly due because of its earnings. It did amazing earnings. It did 33% year over year earnings, beat expectations, did all that stuff. And because of that, it went up a massive amount. From basically just this week, it is up 45%. And I did get a nice position into it before because this is one of my long-term plays that I have. I have an average price of $7.61. I'm up 62% so far. So I love this position. And honestly, if there's a pullback on this, same thing, right? The most I would pay for this is probably around the $9, $10 range, because in my opinion, there's always going to be a little pullback from all-time highs, just how you saw with Neo. There's a pullback and a consolidation, so we might see Afria pulling back a little bit more. And if it doesn't, then you want to average down, right? That's what I plan on doing. I have a good position on him, but I want to get an even bigger position in it. I want to get like 500 shares total, and right now I have 400 shares, 419 shares. So I need about 81 more shares. And the way I would do it, I would do the same thing, right? I would trade Afria options, and I would look like about a month out. I feel like Afria would probably pull back a little bit more. Sell a put, I do it a month out. And what I would do is I would probably play the $9, $9. So you would put in $900 as collateral, and you would get about 42 bucks in premium. And if you want to put more, then you put more. This is one of the stocks that have a low price, so you can put a lot of options into it. You have $9,000 that you want to put into a stock, put 9,000, and you get 420 bucks premium for the month. And if you keep doing this on a monthly basis, you get 400 bucks every month, if not even more or less, around $400. It's a pretty good one to get into, and that's what I'm going to be doing. Remember, I'm no financial advisor. Do your own due diligence. Everyone has their own risk tolerances, so you just do whatever you need to do to fit your criteria. And so you get about 42 bucks for every $900 for collateral, and that's a pretty good deal. And you get a very huge discount if it ever decides to go back down to $9. And Afria is one of those stocks that's going to dominate, right? Because Afria and Tilray are merging soon. It's going to be one of the biggest cannabis plays out there. And with cannabis slowly getting legalized in the world, more people are going to buy it. Afria is going to be taking a dominant approach to it. It's going to be have a dominant. It's going to have a big chunk of the market to its disposal. It's just going to have a powerful position in it. Afria is going to be a nice play for the future if you want to get into the cannabis space, especially with Joe Biden also going to legalize it in the national level, hopefully. When that happens, we might see Afria explode even more. Won't be surprised to see Afria going up another 10, 20, 30 bucks in the next few years. And you want to be riding the wave. And yeah, Afria, a stock to be watching. If it goes down, a potential buy. Next one we have here is, you guessed it, JMIA stock. JMIA stock is an e-commerce play in Africa. If you want to play the e-commerce game, this is one of the more smaller companies compared to Amazon, which is a $1 trillion, and Alibaba right there, huge monsters. And JMIA is going to be a play you can do in the Africa space. And right now it is at 3.2 billion. If you believe that it can slowly go up to Amazon, I don't think it would be $1 trillion in the next few years, but it can certainly 10x and get to 32 billion. I won't be surprised if that happens. And if we look at the graph, Jumia is getting really, really close to its all-time highs. All-time highs, it was at about, where is it at? Where is the all-time highs at? I believe it was at 50 bucks, if I'm not mistaken. I believe it was at $50. So it's getting close to that. Same thing. I wouldn't buy anything right now unless it hits to the low 30 range or even close to it. So the way I would do it is I would do the same thing. I would sell Jumia puts until it would get close to that position, so you would have massive upside. And from the premium that I get from the stocks that I'm selling, the options that I'm selling, I would put that money into the stock itself. So you would make money from Jumia going upwards, and you would make money from selling the options as time goes on. If ever Jumia ever has that huge dip, because these stocks have ran up a lot, right? You see Neo going up thousands of percent. You see Jumia going up thousands of percent. You see Afria going up nine of hundreds of percent since its lows. And any bad news, any market correction, you can see these stocks go down just as fast as they go up. and that's why you gotta be careful with these things. So when I'm selling options, I want to sell options that I know is a good deal and I don't mind holding. And that's something you really need to pay attention to. When you're doing options, it's risky plays. But when you're selling options, you have most of the control, right? Because you get to sell at the price that you're willing to purchase the stock at a massive discount, and you get paid to do it. And that's why I love doing these things. Selling these options, it's a win-win if you don't care about holding the stock, right? And if you love the stock and you're willing to hold the stock, why not get paid for it? That's why I love doing these option plays. You get paid maybe 5-10% for the whole month because these stocks are so volatile. The more volatile the stock is, the more premium you get, right? Because it's more riskier. And when you're doing these plays, it's a win-win. I love Jumia. I believe Jumia is going to be a big company in Africa. I believe it's going to at least double from where it is right now. If not this year, the next year, right? I believe it will double at least as long as it can get its revenue back up. I believe that Jumia will grow massively. It'll be a big player over there, and it will just destroy the market over there. And I don't see the reason why at $30, which is a massive discount where it is right now, $13, why would we not purchase this unless some really bad news happens, right? And if anything bad, you can always sell the stock if it does get executed. So just pay attention to Jumia. I believe Jumia is going to be a massive player in Africa, massive potential. Will not be surprised if 10, 20 years from now, it'll be worth 20 to 30 times more than it is right now, as long as it can execute. And the next one that I really like is MP Materials. MP Materials, if you believe that the EV market is the future, which, come on, we already know it. So we already starting to see the shift from gas cars to electric vehicles. Then MP Materials is playing on the mining industry, in which all these materials that go into the electric vehicles, they need these minerals, these materials, and MP Materials is going to be the ones that are going to be mining it out. And as long as the markets keep going towards electric vehicles as time goes on, they're going to need more magnets, and this is exactly what MP Materials is going to be supplying. And same thing, I will do the same thing. This is the best way to do it, in my opinion. If you want to buy the stock and you have the enough capital to do so, just play options, sell options. You get the premium, you put that premium back into the stock, buy the shares, and you keep doing it as time goes on. And your position, you built out a position over time, and you're getting paid for it. So it's a win-win in my opinion. As long as the EV markets keep blowing up, keep increasing double digits year over year, MP Materials will also take advantage of that. This is going to be a massive player in mining. Like I said, as long as electric vehicles keep increasing, which they are, then MP Materials will benefit from that. This is one of those stocks that's betting on the future of like robotics, electric vehicles, technology. They need materials. MP Materials is going to be the one giving them out. They're going to be making lots of money. This is the only one in the Western Hemisphere. It's just a play for the future, and I don't see why MP Materials will get to $100 if not more. As more cars are being sold, you're gonna need lots and lots of materials, lots and lots of minerals, lots and lots of metals, all these things. MP Materials is gonna be the one there to supply. Next one to really pay attention to is Tesla stock. I do have a small position in Tesla stock right now. I only have 3 shares, and we're seeing a bit of a pullback. As you see, um, since its all-time highs of around 800, close to $900, it's getting closer to 800 again. Won't be surprised to see this stock going down even more than that because it's been going up massively. I mean, if it can get back to below $700, I would be buying Tesla. I would be buying this one. And Tesla's growing. It's already such a big company, but it's growing so much. Really pay attention to this one. This one's a more expensive one. You're gonna need about $70,000 to play options on it. So most likely, if you don't have the money, I would just wait on it and see more pullbacks. Because on Robinhood, you could buy um, as much as you want because of You don't have to buy shares. You can just buy fractional shares. So that's a good thing with Robinhood. You could just buy fractional shares. So whenever you see a pullback, if you don't have the $70,000, $80,000 to sell puts, then you can just buy fractional shares or individual shares. But once I see the $600 range, this is honestly one of the probably a really good opportunity to purchase this stock. Tesla, come on, Tesla's going to be the number one player in the EV market. It's already the number one player by a big margin, and I wouldn't be surprised to see Tesla hitting a trillion dollar in market cap. Many people are starting to say 2 trillion, 3 trillion, 4 trillion, 5 trillion, and people were saying it was crazy to see Tesla where it is right now a few years ago, and look where it is right now. Like, it's crazy. You just look at this stock from 1 year ago. If you would have gotten anywhere over here and just held, even if you put $1,000, you would have 10 times your money from these prices. So you just have to believe that they would keep executing, and they are. You see Tesla delivering close to 500,000, and they're expected to do 800,000 to a million cars. That's doubling up, and like at the company the size that Tesla is, and it's still doubling up year over year is an insane growth rate. So I would not be surprised to see Tesla at $1 trillion in market cap by the end of the year if the markets do not correct massively like they did in 2020. If there's no huge crash or correction, I would not be surprised to see Tesla continuing to grow. Maybe not as fast as it's been, but at least growing from $800 to $1,000, $200. Like that's just a 25% increase from where it is right now. I would not be surprised. So keep an eye whenever you see a dip in Tesla, then I would just buy some shares or put $100 here, put $100 there into Tesla. And those are the few stocks that I'm actually really paying attention to. These are the stocks that have been down a lot in the past few days. You see Tesla down 2.5%. You see MP Materials down only 1.6%. But when you see these dips right here, they were down 10%. 10%. NEO 10%. You see APHA was the only one that's actually did good in my portfolio. But yeah, those are the stocks to look at forward to. NEO, JMIA, APHA, MP Materials, and Tesla. Two EVs, e-commerce, a cannabis, a mining company playing for the EV. So basically three on EV space. MP Materials just a little bit more different. They're selling the materials for it. That's all huge industries with lots of potential. EV, e-commerce, and cannabis. So pay attention to these stocks. These are my main holdings that I like. If they continue to go down, I'll buy more and just hold. These are the companies I believe in. I'm going to hold them for the long run, and I'm going to show the progress as time goes on with my portfolio. So that's it for today.